Dear students, today we are discussing adjusted trial balance. This is the trial balance in this slide which is prepared before adjustments. Now as you are well aware that this is the trial balance of Roberts Real Estate Company for the month ended November 30, 2019. But keep in mind this is the trial balance which is prepared for all the routine transactions before recording adjusting entries. Now here, if you can recall your memory, we discussed sequence of accounts in trial balance. First, we will keep assets, then liabilities, then capital, then revenues, and then expenses. Now, we will incorporate all the adjusting entries in that trial balance and we will prepare new trial balance. This is called adjusted trial balance. Means the trial balance which is prepared after incorporating adjustments is called adjusted trial balance. Why there is need to prepare adjusted trial balance? Because we have made certain changes related to the accrual accounts, accruals related to the revenues and expenses. We created lot of new accounts related to revenues, expenses, receivables and payables. So we have to incorporate all these new title of accounts as well as uh, some modifications in existing title of accounts. So we have to prepare new trial balance and that is called adjusted trial balance. Actually, we prepare adjusted trial balance again to see that all the debit and credits are equal with each other after passing adjusting entries. So let's see first adjusting entries that we have already discussed. These are the adjusting entries of Roberts Real Estate Company for the month of November. So now we have to incorporate all these adjusting entries into adjusted trial balance. The trial balance which we have already prepared, we will incorporate all these entries and we will prepare new trial balance that will be called adjusted trial balance. So let's see adjusted trial balance. Now this is the Robert Real Estate Company's adjusted trial balance for the month ended November 30, 2019. Title is same, just we have added one more word in trial balance, adjusted trial balance. Now the accounts which does not have any effect due to adjustments will be kept as it is, as these were already given in trial balance before adjustment. Suppose cash is never involved in adjusting entries. We never account any transaction related to cash in adjusting entries. So the cash amount remains the same as it was given before adjusting entries in the trial balance. So there was in trial balance cash has balance of 21,740, so it will remain same 21,740 in adjusted trial balance as well. Similarly, accounts receivable, we did not make any adjustments related to accounts receivable. So accounts receivable will remain same 16,990. Now you see that in adjusting entries, we introduced a new account, management fees receivable, for the management fees revenue earned, but it was not collected by Roberts Real Estate Company, so that's why we showed it as a receivable from the customer. Now at the end of the November, there was management fees receivable from customers 120, so we have incorporated that management fees receivable along other receivable accounts in adjusted trial balance 120. Now then, there was unexpired insurance. In trial balance before adjustments, there was unexpired insurance of 600. Now out of that 600 unexpired insurance, insurance of 50 rupees expired in the month of November. Now the balance at the end of the November in unexpired insurance accounts remains 550. Then office supplies, in trial balance there was balance of 720 in office supplies account, but out of that 720 Office supplies of 220 expired. Now balance in office supplies at the end of the month is 500. Then land, there was no adjustments related to land, so land will remain same 130,000. Similarly, building, we show same cost of building 36,000 as we showed in trial balance before adjustments. Now accumulated depreciation on trial balance before adjustments was 150. Now for the month of November we made adjustments of 150 more. Now accumulated depreciation on building becomes 300. 150 for the month of November, and before November we had balance and accumulated depreciation of building account 150. Now total accumulated depreciation on building is 300. Actually this accumulated depreciation shows the total depreciation by the end of the November charged on office equipment. The cost of office equipment remains same as we showed in trial balance before adjustments, but accumulated depreciation on office equipment was again depreciation of office equipment was again charged for the month of November 45. So already accumulated depreciation before adjustments was 45. Now 45 more for the month of November is added. Now total accumulated depreciation on office equipment becomes 90 by the end of the November. So accumulated depreciation office equipment credit 90. We show it on credit side accumulated depreciation either on building or either on office equipment, uh, as we have already discussed, because it's a contra asset account which is shown against that specific asset against which it is charged. So it is charged against the office equipment, so that's why it's a contra, means opposite to that office equipment. So accumulated depreciation basically shows the uh, total depreciation which has been so far charged on office equipment by the end of November. So further these accounts will be used in financial statement in balance sheet to find out the book value of assets. Means the value of an asset less accumulated depreciation is called book value of an asset. Now that's all about our assets accounts. Then liabilities. Liability of notes payable remains same because there was no adjustments related to notes payable. So 3000 notes payable. Then accounts payable also remains same 23,595 because there was no adjustments related to accounts payable. Now due to adjusting entries, some new liabilities were created in adjusting entries. One was interest payable and other was salaries payable. So we have to show these newly created payable accounts along with all the other payable accounts which were already there in trial balance. Now in adjusting entries we recorded interest payable 30 on credit side, so we will show that interest payable in adjusted trial balance on credit side. Similarly we created liability of salaries payable in adjusting entries journal on credit side, so we will show salaries payable in adjusted trial balance on credit side 180. Unearned management fees. Now if you see that before adjustments there was unearned management fees of 1800. Now out of that 1800, management fees earned for the month of November was 300. So now unearned management fees of 1800 is reduced by 300. Now by the end of the November, unearned management fees account has balance of 1500. Then after liabilities we show capital. So capital account remains same. There was no adjustments related to capital. So James Roberts capital remains same 180,771. James Roberts drawings also remains same 1500. Now after capital we show revenues accounts. So revenue account before adjustments we have in revenue accounts we have credit balance of 15,484. So we have shown here same sales commission earned revenue of 15,484. Now in adjusting entries we earned another revenue. It was titled as management fees earned. On credit side 420. So we have showed here management fees earned and other revenue along with the existing revenue of sales commission earned. Now management fees earned on credit side 420. After revenues, we will show all the expenses accounts. First, we will show the existing the expenses accounts which were already given in trial balance before adjustments. As you can see that before adjustments, there was expense of advertising expense of 1275. So the same expense of 1275 is also given here. Now salaries expense before adjustments, there was salaries expense of 9425. Now another salaries expense incurred by end of the November was 180. Now total salaries expense at the end of the November becomes after adjusting entries in adjusted trial balance, total salaries expense account is increased to 9605. Telephone expense remains same 1195. Now after telephone expense, these are the expenses accounts which we created in adjusting entries. Insurance expense for the month of November 50, office supplies expense for the month of November 220, depreciation expense charged on building 150, depreciation expense charged on office equipment 45, interest expense incurred on loan for the month of November 30. So that's all about our title of accounts which we are supposed to show in adjusted trial balance after recording adjusting entries. Now just to sum up that adjusted trial balance, first we have given here assets, then liabilities, then capital, then revenue accounts and then expenses accounts. Now as we already discussed, the main purpose of preparation of adjusted trial balance is to determine the arithmetical accuracy that either debit and credit both are equal with each other or not. Now if you can see that after recording adjusting entries, then we have prepared adjusted trial balance. Now we will total all debit title of accounts. In debit title of accounts, the total is 225,370. Similarly, we will total all credit title of accounts. The total of all credit title of accounts is 225,370. It means debit and credit are both equal with each other. Now we are in position to prepare financial statements from that adjusted trial balance. So that's all about that adjusted trial balance. Now it provides us basis for the preparation of financial statements. Now from that adjusted trial balance we can easily prepare financial statements such as income statement, statement of owner's equity and balance sheet. That's all about adjusted trial balance thing.